Welcome to the Home Loans Network, powered by the Real Estate Deal Room, where education comes before contracts and knowledge comes before decisions. So, if you are a first-time home buyer or even thinking about buying your first home, this space right here I have created is for you. This podcast is about preparation, clarity, and understanding the process before you even attempt to make a huge financial decision that is a commitment to your life. Today's episode is just going to be a trailer. It's just going to be a preview of what that I will be talking about during my first time home buyers live webinar. That is every second and fourth Wednesday of the month, 7 p.m. Central Standard Time on YouTube at the Real Estate Deal Room. So with that being said, I need you to look at this like this is just a teaser, because I got the whole movie coming for you that is step by step. And from there, I will share so many critical tips and examples and help you really understand why listening live. And the most important part about this, not only you're going to learn, but you're going to be able to ask me any question pertaining to real estate and home ownership. Now, with that being said, let's talk about education and knowledge for first-time home buyers. I need you to be real visual because I'm going to tell you a quick story right? And I need you to picture this. So, you find yourself online looking at a house that you love, right? That's something I do often. You start imagining where the couch is going to go, where the colors on the walls is going to go. And then you start looking at the space and saying, okay, I know where I want this new furniture to be placed at. Then someone else tell you, you know what, Ebony, why don't you just go ahead and just hurry up and make an offer on it? Well, here's the problem. That's where people mess up at. Letting people tell them what to do. Letting sometimes people tell them they don't have a pot to piss in, or they're not even verifiable to even prove that they have that pot to piss in and a window to throw it out of. They let them rush them into doing things that they should not be doing. This is where a lot of my first-time home buyers get in trouble. Not because they are doing the wrong thing, but because they haven't been given the correct information that they need before entering the process. Buying a home is not just about the house, it's about the financing, the credit, the contracts, and options. And every single buyer's situation is different. So that is why for me, education is so extremely important when it comes to home ownership and financing and real estate, just understanding it. During the first time home buyers live that I do every second and fourth Wednesday of the month, I focus on helping buyers understand the full picture before any contracts are signed. I break down how the lenders are looking at your financial situation and your profile, what loan options that are out there and that exist, how the down payment assistance programs work, and how the contract should be either aligned with the financing, meaning structured. So whether the financing is structured, whether the contract is structured. But as a first-time home buyer, you need to make sure that your team is in sync with one another. And when I say your team, I mean the loan officer and the realtor. They don't have to know each other, but they need to understand that you know the basics of this and you know how you want to close your deal, and everybody needs to work together. Because if everyone is not working together, I'm not going to lie to you, it's a possibility your deal can get screwed. So before I invite you to join the live, I want to share 3 first-time home buyer tips along with some real life examples and explain why this education is so important. So the first thing I want to talk about is understanding your credit before you even apply. Credit is more than just a number. Lenders will review your entire credit profile, the payment history, the balances, the utilization, the account age, and the recent activity, okay? Now, when they're looking at your credit profile and they're looking at that income, that is something that we call in the industry DTI, debt to income ratio. So even though, let's say You may have alimony that's coming in that you and your ex agreed upon without the course because it's not on paper and verifiable, right? And it may be $8,000 a month, $15,000 a month. But what you're making is $7,000 a month, and that's what you file in taxes on. Unfortunately, unless you have a true legitimate paper trail and it's been filed with the IRS, or unless you're doing a bank statement type loan, guess what? That doesn't count. So, unfortunately, on paper, it looks like you can afford a house that's much lower than you technically theoretically could afford. So, debt to income ratio is extremely important to understand and know about. And that is something that you will learn during my first time home buyer live seminar every second and fourth Wednesday of the month. So, for an example, a buyer may have solid income, like I said, right? But let's say you just recently open up a new credit card and that increased the balance. That can actually screw your debt to income ratio up. That can actually also potentially screw your credit score up, especially if you was on borderline. Now, there are a lot of programs whereas you can still get a mortgage even with not the best credit. But what if you was already at a low credit score and it already put you at the threshold, whereas the interest rate is already a little high? But if your score goes down a little further and your interest rate has to go up, that will put you in a situation that you could potentially no longer qualify because your debt to income ratio. So understand that a lot of buyers assume income can offset credit, but that's not how it works all the time, especially when it comes to the approval. Sometimes there are compensating factors. But during this live, I will go deeper into all of that. How lenders review the credit beyond the score, how credit impacts the loan options and the pricing, what actions to avoid before and during the home buyer process, such as going out to buy a new car. I've done that before too, because I understand when you get to the closing table, they will rerun your credit. And you could have qualified just 2 days ago, and 2 days later, you no longer qualify, and your deal has just crashed at the closing table. How to position your credit before you even start applying, meaning, do you need to pay off some things? The things that are already paid off or that's on your credit, you may not have to pay them off. These are things that you need to really know what you should do before you apply. Now, I want to go to my second tip for you. Get pre-approved before you start shopping. Number one, realtors will love you before that because number one, you got some realtors that won't even see you unless not only you have a pre-approval, but you have a reputable pre-approval. Meaning if they never heard that company, they're going to tell you that you need to use another loan officer or another mortgage broker. And that is because so many realtors, especially ones that seasoned, they have got duped in the past with bogus pre-approvals and they've lost not just that deal, but lost that seller. So it's really important if you want to take a realtor, if you want a realtor to take you serious, you must come to the table with a real pre-approval and they take that pre-approval to see how much of a house you genuinely can turn around and afford. Now, you probably say, well, you know what? I can afford a house for $500,000, but my pre-approval is for $300,000. Then that realtor is going to say, okay, well, your pre-approval say $300,000. Do you get the other $200,000 for it? Because the fact of the matter is, if you're pre-approved for $300,000, they should only be sending you homes for sale for around $300,000, maybe $350,000 or $400,000 at the most, because you're coming to closing with the difference. But most realtors would want to see that you have the funding to close it, whether it is, money from your account, whether it's an IRA, like proof of funds to close on top of the actual pre-approval. So this is important for you to really have this. Now, understand a pre-approval is not just that pre-approval letter either. It is like the review of your income, the credit, the debts, and the documentation. A common example is a buyer, who starts shopping first. They actually find a home that they love, and then they learn they qualify for less than expected. Not to mention you wasted your time, you wasted that realtor time, and you're going to potentially more than likely lose that property because you don't qualify for it. Just point blank period. I don't care how much money that you have in the bank, if you're not willing to put that money down for the difference, you don't qualify for it according to the banks because documentation is everything. This will actually lead to disappointment and renegotiations or losing the home altogether. Now, in the live, I will actually explain what a true pre-approval is, what it includes, how long it lasts, how to protect it once you get it and once it's issued, why the pre-approval strengthens your offer. Because if you have that pre-approval, and especially with a reputable company, and John down the street has a pre-approval, let me correct that. John has a pre-qualification. Guess what? That realtor more than likely is going to accept your offer with the pre-approval versus John who has the pre-qualification, because the pre-qualification is given based upon the information that you provide. When I first talk to potential borrowers, I actually will turn around and ask them certain pre-qualifying questions, which will let me know if I could potentially proceed to a possible pre-approval. But the pre-qualification is information that is verbally given and provided, is not verifiable. It has not been verified. The pre-approval comes when the information has been verified. One, when it comes to the pre-approval, the credit score is what it is. It has been pulled, like whether it's Advantage Credit, right? That's a company that I use. It's been verified, it's documented, it's on paper. The pre-qualification, you told me, you said I'm about a 700 credit score. You said my Credit Karma said this. So the Credit Karma give you an idea of what you potentially qualify for, but your Credit Karma is not the actual credit report that the lenders are going to use. So that is really important for you to understand that. Now, with that being said, first-time home buyers, tip number 3. Do not sign a contract without understanding your financing. A purchase contract is a legal document. Number 1, you don't want to lose your earnest money either. Once you sign, timelines kick in, right? So let's say that you have a contract where it said an estimated closing date is 30 days. Well, if you decide you're getting a first-time home buyer grant can take 45 to 60 days. It just depends. You're missing 15 to 30 days there, which means you could potentially lose your earnest money, because what if they decide that they do not want to do a contract extension? So it's very important for you to understand your financing before you sign and understand there are timelines in place. Otherwise, there's risk that's potentially involved. For an example, like I said, a buyer may assume a seller concessions or down payment assistance will cover the closing costs, only to learn later that those items was never even written properly in the contract. What if you decided to do an offer and say, okay, I'll place an offer on this contract, but like I said, you never discuss with the seller's agent that you're going to get a grant? Well, that grant, like I said, can take much longer, which will prolong the closing. And then you had Steve, who was willing to purchase the property, who did not have a home buyer's grant. They didn't have to wait for that. They was willing to go ahead and offer a full offer. That's another situation right there. So now you're going to lose the earnest money potentially, because in their mind, you was not upfront. So it's really important to make sure that these things are written out in the contract and everyone knows ahead of time. Sometimes it may not be in a contract. It may be done as an informative addendum. An addendum is an additional document that's added to the contract that will state certain things. Other times there's the contract, whereas the financing deadlines didn't align with the offer or the type of property. So for an example, you was approved FHA, right? But the property is not going to pass an FHA appraisal. You really need to go conventional. But the issue is your credit don't say you can go conventional. You can lose that property. Let's say you was approved FHA and you saw a condo that you want. Well, guess what? A lot of condos are not FHA approved. So you have to make sure that the condo is a warrantable condo, meaning FHA approved. Now, I do have some lenders that will approve a condo that is a non-warrantable condo, which means it's not FHA approved. But again, you won't even know that until you talk to somebody. So you don't want to get approval and just come to find out that you can't even purchase what you're really looking for anyway. So these are the things that I will go through. So during the live, like I will walk through the financing contingencies and the deadlines, the earnest money consideration, and keep you from losing that earnest money, closing costs, how you could potentially, have these grants that help you pay the closing costs, the concessions, meaning seller concessions, how you can actually ask the seller to potentially contribute towards the closing costs with these concessions that will help your closing costs potentially be little to no money down. Then there's appraisals involved and property conditions requirements depending upon the lender. If they're saying there are certain things that needs to be done based upon that appraisal when an inspection came out. Now, how contract terms should support the loan approval. So for an example, if the loan approval is basically saying this is $250,000, and like I said, it's an FHA approval, but yet you're out there looking at a property that more so is not going to pass FHA financing because of the inspection or needs a termite inspection, and that doesn't pass. There's so many things involved because FHA properties usually want everything from, depending upon where it's located. If it's in Florida, get a flood report done. So check the zoning, things of that nature. If it's in California, then it might be an insurance issue. So it's so many things that are involved. So knowing your market, knowing the company you're going with, and knowing how your credit is and your income is and your DTI is also going to determine, the different type of structures and how just your contract should be written. Now, also the other thing that I generally go into is like just the different loan types, the assistance that are there, and all the different options to get you to the point that you are closing at the closing table, right? And, your deal is structured perfectly and there is no stress. Another major focus is just like, during the live is just understanding these different type of loan types, these down payment programs, right? Different mortgage loan options and how they're designed for you, how the down payment assistance programs can work, how there's income limitations. So if you're making $500,000 a year, no, you do not qualify for a first-time home buyer down payment assistance program, okay? The different repayment terms that are out there and the eligibility factors. So yes, there are eligibility factors. How loan choices impact your monthly payments and the cash needed to close. This is very important. Every buyer situation is different. Different income types, different credit histories, different savings. The live will help you understand that every buyer situation is totally different. So I don't care what John told you he did, and Dave told you what he did, and Nancy told you how her closing went, and Bobby told you when he closed that this is what he did. I promise you, everybody's situation is different. So I don't care if they do own that house. Do not let them tell you something that's different that could potentially scare you or screw up your deal. When it comes to the home buying timeline, I will walk with you through the entire process from the beginning to the end. So that's why you have to tune in every Tuesday and every second and fourth Wednesday of the month. Whether it's the pre-approval, getting yourself to the closing. I want you to know everything that's going to happen from the documentation and everything that is needed. Now, this podcast is just an introduction. It's simply just an introduction because there are so many different things that I talk about. But the First Time Home Buyer Live is where everything comes together. It is so interactive. Questions are welcome. I want questions. Topics are always updated regularly based on the current housing and mortgage situation and even your situation. This is where education turns into clarity, and it do not cost you anything but just your time. Make sure you join me live, the First Time Home Buyers webinar that's going to take place and will take place and does take place every second and fourth Wednesday of the month at 7 p.m. Central Standard Time. Find it on YouTube by searching The Real Estate Deal Room. Make sure you don't do anything else. You subscribe and turn on those notifications so you can listen live when you do that. If you're thinking about buying your first home, this podcast is your preview. This is your trailer. The live is where the real learning begins. Homeownership is not about guessing. It's about understanding your financing, your options, and your position when it comes to purchasing a home before you even commit, okay? because when it comes to buying, you are only good as your information. So make sure the information that you get is reputable, verifiable, and the current changes are the changes that make sense for you. I'll see you live Wednesday, the second and fourth Wednesday of the month at the Real Estate Deal Room on YouTube.